Technical versus fundamental analysis. This is what we're going to discuss in this video, and we'll start with the fundamental analysis. With the fundamental analysis, we're trying to calculate the intrinsic value of a stock by looking at basic economic factors, which include revenue, expenses, income, growth, prospect, competitive factors, expected returns, and much more, of course. The goal is to establish the intrinsic value of a company that includes all these factors. This is a long-term approach. That is why traders usually don't use this. Actually, they never use this. As I will say many times, you can find information to do the fundamental analysis in the annual report. It will become easier after some time you practice this. In the annual report you will find all the info about the stock. We'll also talk about some methods to use the numbers. A bit more complicated, but stay there. You'll learn this. It is a long effort that will last forever because you need to do this just once. Now let's talk about the technical analysis. Here we try to make money just by looking at the market activity, not looking at the company itself. Here we study the chart of a stock and we place a trade based on that. Relevant factors here include the lines, support, resistance level, trend lines. For example, in this case, if you see this, the stock is approaching that trend line. It can go either down or up, so yeah, that will make a huge difference, as the price will move a lot after that. Usually candlesticks are used. Also you can place moving averages there. You can place volumes there to see how much is the activity. The goal is to make short-term trades. Usually there is a risk management here. This is a lot more risky though, as it is a lot more stressful, and also it takes nothing to lose your mind and lose all your money. So you need to be careful here. I tried trading, but it was too stressful and I felt like I was having no life at all. It helped against greediness, of course, but that's why I'm here to teach you this, so you don't need to do trading. The average person does better investing. 90% of the people in trading lose money. Also, richest people are investors. Buffett is one of them. There are also good traders, but usually investors do better. Investors look at cool stuff such as innovations, investments, discounted cash flow, revenue, and if you calculate the intrinsic value, you can see if the market price is bigger than intrinsic value, the stock is overvalued. Otherwise, if the market price is less than the intrinsic value, the stock is undervalued. So yeah, I hope you enjoyed this video, and I hope I explained you everything. Thank you.